Hello and welcome everybody to a new educational video. This time we're gonna be talking about the X model from the MMXM trader. Now you've probably seen various tweets already about people using this model with success, and we're gonna dive in a little bit deeper in this video how to properly use this model. So over here you can see a collage of many traders who already use this model with success and getting those payouts and passing challenges with it. So first of all, let's start off with a crude schematic of price action. Now what is the X model? We know it's either a previous daily high or previous daily low run. Then we want to see a 15-minute market structure shift with SMT. And then we're going to be aiming for a 1 hour fair value gap around 50% of the range, right? So over here we've got a bearish example. We can clearly see previous daily high is outlined over here. You can see price action runs that previous daily high, then starts to break down in price action. So we want to see SMT on those highs, right, and a 15-minute market structure shift. And then we're going to be aiming for around 50% of the level of this range, and there should be a 1 hour fair value gap. Now notice how we are having a 25% level and the 50% level. Now we want to have fair value gaps over here as well, right? So the opportunity lies for a trade setup around the 25% level as well, and aiming for that 50% level, which should be a 1 hour fair value gap, and that is the draw on liquidity. Over here we've got a bullish example, right? We've got previous daily low over here, price runs previous daily low, and then we want to see SMT and a 15-minute market structure shift happen on those lows. Again, 25% level, there's where the opportunity lies for a trade setup as well. And we're going to be aiming for that 50% level. Now we need to see those 1 hour fair value gaps in the 50% level. That is our draw on liquidity. Just like a bearish example, with this bullish example, we want to see previous daily low run, and then we aim for that 50% level 1 hour fair value gap. So over here we have a blank chart, and we're gonna specifically focus on this candle here. So this daily candle, and let's see how that looks like. So what do we want to see first? We want to see buy side liquidity get rated, right? So this is a key level, this is an old high, and we can see we left relative equal highs on that previous day, and now this day is our focus, and we want to see that previous daily high run, right? So over here we run previous daily high. Now what kind of range are we working with? We want to use this entire candles range, right? This is the previous daily candle. We want to see a previous daily high run over here, and we're going to use this entire candle to mark out our 50% level, and that is where our draw on liquidity will be. So how does that look like on the lower time frame, right? We have a 1 hour time frame here from NASDAQ from 17th of May 2024. We can see previous daily high above here. We can see it run that buy side liquidity, and notice how we have that 25% level and that 50% level, right? So where should your eye go? So mark out those fair value gaps, right? We've got that fair value gap around the 25% level, and we've got that fair value gap on the 50% level. This is our draw on liquidity. So if I mark out those fair value gaps over here, we can see price reacting on that fair value gap and retracing back up, and then finishing off the move, completing that model, right? That 50% level fair value gap on the 1 hour. Now, where do we find an opportunity to get in, right? So we're now on the 15-minute chart from NASDAQ. We know previous daily high has been run. We can clearly see prices breaking down lower, and we wanna find an opportunity to trade towards that 50% level, that 1 hour fair value gap. All right, so let's zoom in a little bit more, right? Now we want to have that SMT and a 15-minute structure shift, right? That is part of the model. Previous daily high run, and then we wait for a 15-minute structure shift and then SMT to form. So over here, we've got this low till this high, and then we break that low. So now we have a 15-minute market structure shift, right? We form SMT on these highs. We're respecting this fair value gap, and then we're forming a high probability order block over here. So this is an opportunity to get in on the trade, and then targeting that 50% level 1 hour fair value gap, right? So over here we've got another opportunity, right? Again, 15-minute market structure shift, then price retraces back in. We saw that SMT earlier, right, on these highs. Now where do we want to get in? The 25% level is around here, and there's still an opportunity to get in over here. So we mark out our midnight opening price, right? We want to be a seller above midnight opening price. Then we see price run up, take out buy side liquidity. Again, we have SMT on these highs as well right now. Now that price trades lower and then forms a high probability order block again, right? Because we rate buy side liquidity, we form that SMT, then breaking down lower, and price seeks to reprice in this little fair value gap and use that high probability order block. So this is another opportunity to get in a short and reach that drawn liquidity, which is that 50% of the previous daily candle. So over here we've got EURUSD daily chart, right? We can also use this model as a continuation, right? So we've got a bullish fair value gap on the daily time frame, and we're clearly in an uptrend, right? So the market profile is bullish over here. You can see price rates previous daily low into that key level, that daily fair value gap, and then we're aiming for that previous daily candle, that range 50% level over here. So we can take in this range of this candle, and we're aiming for 50% of this daily candle. So what does that look like on the lower time frame, right? We're on the 1 hour over here. You can see previous daily low is over here. We rate that previous daily low, and then we start to trade up higher, and we're reaching that 50% level. And now you're probably wondering, there is no 1 hour fair value gap over here, right? So what is the drawn liquidity? If you cannot find a 1 hour fair value gap, you can go into the 15-minute time frame and then seek a fair value gap over there. We don't go lower than the 15-minute time frame. If there's no fair value gap on the 15-minute, then there is no model over here. So we will only stick to the 1 hour fair value gap draw or the 15-minute fair value gap if there is not a 1 hour fair value gap present, right? So, and where is that 15-minute fair value gap? We can see this little gap over here, and it is around the 50% level, right? So you want to take profit around the 50% level. It doesn't necessarily have to go to the 50% level, but it has to be in the vicinity of it. So this fair value gap is in the vicinity of that 50% level of the previous daily candle, and that should be the drawn liquidity. Now, where is the opportunity to get in, right? First of all, always mark out your New York opening price, right? The New York midnight is 12 a.m. EST. We want to be a buyer below it and a seller above it. And as we are in a bullish example, we want to be a buyer below it, right? So previous daily low gets run over here. Key is that SMT formed on the lows, right? Then, because we're on a 15-minute, right, we want to see a market structure shift. You can see this swing high to this swing low, and then we break above it. Now, there is a high probability order block formed over here because there's a change in the state of delivery, and that SMT confirms that high probability order block. So then we can see price push up, and then we leave a fair value gap behind, and this is also where you find your opportunity for a long setup. So this is a very good fair value gap to enter on. Then price expands up higher. Remember, there is no 1 hour fair value gap, but there is a 15-minute fair value gap here around the 50% level. So what we're doing here is aiming for 50% of that level, right? So you enter over here in the fair value gap, put your stop loss below the high probability order block, and then aim for 50% of that previous daily candles range. All right, so let's go to another example. We've got a bullish example over here. We got GBP AUD daily chart. Now for a bullish example, we want to see previous daily low get run, right? So we've got this over here. We take out previous daily low. Now, what kind of range are we going to take, right? We know mark out our previous daily high as well. And we're going to be aiming for 50% of that candle's range, right? So what does that look like? If you take it over here, we've got the range over here. So this is what we're going to work with. Candle range number 1, previous daily low run, and then aiming for 50% of that previous candle, and then looking for a 1 hour fair value gap to take profit. So going into the lower time frame, we've got this 60-minute chart or a 1 hour chart. Now we're looking to aim for a 1 hour fair value gap at or around 50% of that previous daily candles range, right? So we can see previous daily low gets run, and now our target should be eyeing up those 1 hour fair value gaps around that 50% level. So what does confirm our trade setup? 15-minute market structure shift and 15-minute SMT, right? So marking out the 1 hour fair value gap again over here, this is the take profit. And if we go to the lower time frame, the 15-minute, we can clearly see we have SMT on these lows down here. And now we form a high probability order block over here as well and a breaker. And you can see price taps back into that over here, into the fair value gap here, right? And then moving back up higher. So hitting target over here, 1 hour fair value gap. And that is basically the model for this bullish example. So I hope you enjoyed this video, and if you have questions or you really like this video, make sure to hit the like button, subscribe as always, share your thoughts in the comments, and we'll speak in the next video.